Hello, everyone. A very good morning or good afternoon to you and welcome. I'm pleased to be moderating a conversation around UK purpose-built student accommodation today. By way of introduction, my name is Peter Young, and I am the CEO of Q Investment Partners, or QIP for short. QIP is a private equity real estate business focused on investing in established real estate country markets. We currently invest in the UK and the US in the residential living sector and typically invest around 10% of our own equity alongside our investors. Now, please allow me to briefly introduce our speakers. With us on the panel, we have an operator, we have a PBSA market specialist, an investor, and a data specialist platform focused on student housing to lend their expertise today.
I guess the main question we get asked a lot is, what we're seeing in the sector circumstantial or structural? And I think overwhelmingly it's the circumstantial issues that we're seeing rather than structural issues. I think student has performed pretty well throughout the last year or so, albeit it hasn't been untouched by the pandemic issues. But I think what it has shown is that it continues to be a defensive asset class and continues to be non-cyclical. I think it's important to note that the COVID-19 issue is a pandemic rather than an economic event, although it does have economic impacts, obviously. But I think what has been shown is that student accommodation is counter-cyclical to sort of macroeconomic movements. And what we've seen is the uptick in student demand. And I think really what I've tried to do here is just traffic light, I guess, what we're seeing in the market across the key themes. And what we can see is that it's sort of overwhelmingly green. No, I don't think anyone's come out of this unscathed, but we haven't seen, kind of occupancies down in the kind of 10-20%, as I think has been written about in markets like Australia. I think talking to a number of different occupiers, we're probably in the kind of 65, 70s plus, which is good. Obviously, some assets will have been hit worse than others, depending on where their customer groups are coming from. And I think if you were more leaning towards a particular group of international students, you probably have found more challenges. But from a domestic occupancy perspective, I think it's been very strong. Unite put out a survey a couple of weeks ago saying that I think it was like 85% of their students surveyed, I think they surveyed 2,000 students, said that overwhelmingly they wanted to be in accommodation even during a lockdown period. And I think what we know is that the students would rather be locked down at uni than they would be with mum and dad at home. And I think probably mum and dad would say the same thing.
Long term, it is still very much positive. And actually recently the government released an update to its international strategy on student numbers. And they are very much still pushing ahead with trying to increase the number of international students in the UK. And the goal there is actually to increase numbers to 600,000 per year by 2030, so a pretty big jump. And there's various policies the government is introducing or has introduced to help kind of bring that forward. One, for example, being the ability for internationals to stay in the UK 2 years after graduation. So on the whole, short term, yes, there are challenges, but long term, things are probably moving in the right direction. Well, what you can see in the chart there from the light white line really is the somewhat slowdown in planning application activity. Now, for the most part, that's actually positive from a investor or operator perspective. Obviously, if the number of beds coming to the market is declining or slowing, then obviously that is a good thing. But on the whole, we're seeing that rebound. So again, it'll be interesting to see how that develops. On the demand side, obviously, Paddy's already briefly touched on some of that, but for the most part, very positive for 2020. EU acceptances, interestingly, were actually up this year, although applications were down. So they were actually up 1.9%. I think, again, as Paddy's already alluded to, we would expect those numbers to start falling going forward with the loss of home fee status. But the impact should be relatively limited, given that EU numbers, make up a relatively small proportion of the student population. And really kind of the shining light there is acceptances from non-EU students were up significantly, so up 16.9.
However, on a brighter note, since the PM announcement last week, we've had a swell of bookings. And the successful vaccination rollout news and virus case numbers droppings mean that's set to continue. So the trend is on and up. All in all, a nail-biting end to the academic year, as most students are expected to book in June, July, August and September for the 2021 academic year, food deliveries and the things that help them while in isolation. All of our property teams have mental health awareness training, and we're an official sponsor of Student Minds, the mental health charity, and work closely with local universities if students need further support. On a final note, the support of students is paramount to the value of the investments that we manage. And so we need to focus on students in this difficult time and to support them financially with refunds where we are able. And as I say, many of our investors have done that, both in order to maintain the reputation of the PBSA sector, as well as the reputation of the properties under management.
Fundamentally, I think the main takeaway for us was having active and dynamic mitigation strategies, and ensuring that there were the commercially disciplined investment management decisions being made, essentially assisted us in managing financial positions and all the stakeholder relationships at the end of the day.
And I guess the biggest one really is APG signing up with Scape for 500 million worth of pipeline. Well, I think they've got about 250 million of pipeline to convert, and then can do another 250 million as well. So I think they're all real sort of great positive signals for the market. And these are big institutional smart investors who are really sort of showing that they believe in the sector.
Anything new within the real estate sector, but I think in times like these, this just becomes a more focused talking point. This is usually because investors are not typically just looking for inflation-beating yields, but in an ideal world also want some, all-weather protection on these yields. And it's that all-weather characteristics that starts getting, stress tested in such black swan events. As such, you usually find a fundamental reassessment of pricing and risk in times like these. And this is where the defensiveness and resilience of some of the alternative sectors is starting to stick out, such as PBSA. There's a few snippets here that I think Paddy's also covered, but just from an Asian context, we've seen the likes of Far East as well, clearly sending out a signal to further invest in the sector, especially in search for defensive recurring income.
And I think the question is on sales going forward this year. Will they have rent guarantees and things like that to kind of cover the difference? I think that's probably an appropriate conversation for people to be having. But I think from a yield perspective, I think people are seeing that it's the resilience in the sector, and there's no need for any kind of knee-jerk reactions. Nothing on the distress side yet, but I don't doubt that there will be certain situations, but I imagine it will be quite isolated.